Hey, it's Owen, Bigland. This is the Inside Edge video blog. Happy New Year to everyone. I hope everyone had a good holiday season. I know I did, as always. Now it's mid-January, so it's back to work, and I'm expecting another big year in Vancouver real estate for 2017. So without further ado, it's time for my annual market forecast, what I see happening in Vancouver real estate for the coming year for 2017. Now, I had a lot of people that have emailed me and posted on my YouTube blog, waiting for this video blog, wanting to know, of course, what my predictions are for Vancouver home prices. And not much has changed from the other 5 annual prediction blogs I've done. I don't get into what I think prices are going to do in the short term. Your guess is as good as mine what the price of that 2-bedroom Yaletown condo is going to do this year. It might go up another 10 or 15%. Maybe we are overdue for what I call a run-of-the-mill market correction. The last one we had was in 2012, where the market went down anywhere between 8 to 10%. We're overdue for one of those. Maybe 2017 will be the year. The reason I don't get into short-term predictions is nobody knows with any certainty. And what I've pounded home on this blog over the last 6 years is tune out all the short-term fluctuations and negativity and dark clouds that are on the horizon. If you can afford to buy your principal residence and you're qualified for a mortgage, buy it, keep it for 8 to 10 years, which has always been my magical holding period, or longer. I hold my properties forever. You're going to do fantastic. So, nothing has really changed over the last 5 years. I mean, look at 2016. When I go back, and I'll maybe post a link here to the blog I did, market update I did for January of last year. Nobody saw the year we had in real estate last year. Just about most people in the media, most experts, economists were calling for a correction in Vancouver real estate. Yet it went up probably on average anywhere between 20 and 30%. Same thing in 2015. People were playing the law of averages, thought we were overdue for a correction, and were calling for a correction in 2015. Market was up about 20%. I mean, there's pundits out there that have been calling for a correction basically since the last small correction we had in 2012. Now, some people listen to them. If you've been on the sidelines for the last 4 or 5 years, you're probably missed out on about 75 or 80% return. So the crazy thing is, even if we get one of these run-of-the-mill corrections, or maybe even something a little more severe over the next year or year and a half, and the market goes down 10 or 15%, geez, you're still down about 60% if you would have bought that property back in 2013. So I don't really get into short-term market predictions, especially in this crazy Vancouver market. We've got a local government, a city government in Vancouver, as well as a provincial government, and to some extent the federal government, which are doing everything they can to take the wheels off this market with the foreign buyers tax, the empty home tax, no banning of Airbnb, about the 5th tightening of the mortgage regulations over the last couple of years, the new stress test on mortgages. Yet these things have done very little so far to cool the market. I know some people are going to put a couple of comments here on my YouTube blog saying I sound like a realtor. It's always a good time to buy and a good time to sell. But listen, the market is still rolling, and it's still a strong seller's market for the most part. So let me give you a snapshot right now. It's mid-January, and that's why I like to wait until the first 2 or 3 weeks in January before I post this, because the first 2 or 3 weeks in January tell a pretty good story of what I think the market's going to do moving forward. Because a lot of listings start coming out in early January. I know with my business, I've listed 3 properties in the last week and a half, and I've got a couple more I'm getting ready to list later this month. So I'll kind of give you a snapshot of where I see the market right now. So for condos, so these would be 1-bedroom, 1-den, 2-bedroom, 3-bedroom, priced under $1 million or so. It is still a strong seller's market. And part of the reason for that is there is still ultra-low record inventory. That has not changed. I hate to sound like a broken record. Over the last 18 months, I've been telling people that this is unprecedented, the amount of inventory we have. There's nothing for sale right now. So that's why when you see these headlines, these attention-grabbing headlines in the paper and on the news about Vancouver sales plummet 20–30%, don't read too much into it. The reason that the sales are down so much is because we don't have anything to sell them. I tell people, I'll give you an example right now. I listed 2 condos last week. Now these are what I would call starter level condos, a 2-bedroom and a 3-bedroom, older wood frame units. I can tell you that I did holdbacks on both these units. I ended up getting multiple offers on these properties. So that doesn't scream a market that's in decline, at least not for condos, when you're still doing holdbacks, getting multiple offers, and in most cases selling at or above asking price. You list a good 1-bedroom condo right now in Yaletown for $500,000, chances are you're going to get a lot of interest in that property as soon as it hits the MLS, maybe even get multiple offers. We're not getting as many multiple offers as we were last spring, but again, it is still a strong seller's market. As far as the detached market goes, that's a different story, especially the higher end detached market. Properties of $3, $4, $5 million and up. That market has taken a hit, and most of that is from the foreign buyer's tax. So prices there in the detached market are off anywhere from 5 to 15 to even a little bit more on some very high-end properties on the west side. You're not generally getting multiple offers on those homes. And it would be the same thing for higher end condos, $2, $3, $4 million condos. But for the majority of the market, 95% of the buyers that are out there are buying properties priced in the $500,000, $600,000, $800,000 range condos. And that's probably 90–95% of the market. For that market, it is still a seller's market. Sales volume are down, but if I tell people if I had 10 listings this month, I'm probably going to sell all 10 listings, especially if they're condos. So don't read too much into the market stats of the volume going down, the sales volume going down. Now, moving forward, I've been saying now for the last year and a half as well, that before we start to see some prices coming down, especially on condos moving forward, we're going to have to see a few things. We're going to have to see inventory start building. And unfortunately, it took a reverse in December. I was looking at the market stats at the end of the month for December 2016. We had somewhere around 1,100 listings, which was very low. December's always a low month. We had 1,400 sales last month for Vancouver and Richmond. So the inventory even shrunk further in December. So moving forward, we've got to see the ratio of new listings to sales about 2 to 1. And we're going to need to see that continue on for 4, 5, 6 months, letting inventory rise before you'll start to see a softening in prices. The other thing, we're going to need to start seeing interest rate hikes. Done lots of blogs on it in the past. That's where why the prices are where they're at right now. It's because of this cheap money that's out there. So you can lock in a 3-year mortgage rate right now at 2.3%. That would have been double 6 or 7 years ago. So we need to see interest rates start to creep up as well. And maybe that'll happen in 2017. Let's see. But those are the precursors before you start to see prices softening. So I hate to rain on people's parade. There are a lot of people out there, a lot of anonymous bloggers and some media people out there that are letting their biases show. They've got an ultimatum that is so obvious. They're seeing things that aren't there yet. I'm seeing headlines about desperate sellers. And prices being slashed and no buyers. Folks, I mean, I'm giving you the straight goods here from this front line. I'm not seeing any of that. I am not seeing even a slightest hint of desperate sellers out there. Very few price corrections, at least as again, on the 1-bedroom, 2-bedroom condos. Maybe on some of the high-end luxury and detached properties in Vancouver on the west side. Sure, they're languishing a bit and you're getting some price corrections, but that represents about 5% of the buyers. For the average Joe out there, for the average buyer, which is going to be a condo market or a townhouse, the prices are not come down yet. We'll see. You'll be the first ones to know once I start seeing inventory start to creep up, or maybe an interest rate hike, and I'm starting to see more inventory instead of looking up a building right now where you might have 200 units and 1 for sale or none for sale. We need it to get where, you know, you've got a building of 200 units and you've got 7 or 8 units for sale. I haven't seen that since 2012, early 2013. So that's kind of my prediction. I know some people aren't going to like it. I don't get into short term. For all I know, the price of that Yaletown condo, 1-bedroom, could go up another 10% this year. hey, inventories could creep up, interest rates, we could get a couple of hikes later this spring and summer, and we see a 5–10% correction. My bottom line, though, is to a young person who's watching my blog right now, the question is, should I buy today? Well, I guess it all depends on your situation, which I'm not privy to a lot of the times. So if you've got the money together, let's say you're living in your parents' home right now, you're fine there, you're still maybe saving for your down payment or getting your qualification put together, then hey, no problem. Wait it out, maybe you will get a better buying opportunity later this spring or later this summer or fall. So that's fine. But if you're, let's say, a person who's qualified, you've got the down payment, you're pre-qualified for a mortgage, and you're renting right now, and you're paying $2,000 a month for a one-bedroom, $3,000 a month for a two-bedroom, then my advice to you would be to buy. Just get in the market. You know, you're throwing away your money as a tenant, and as a matter of fact, it's going to be cheaper to own than it is what you're paying for rent right now. So I would just move forward. Forget about trying to get cute and out-time the markets. Buy today, hold it for 8 to 10 years, and I can guarantee you'll do fine. So that's why on the short term, I don't make predictions. On the long term, though, it's going to be fantastic. If you bought a Yaletown one-bedroom condo today for $500,000, take my advice, keep it for at least 8 to 10 years, but longer the better. Let's say, for instance, you buy it today, keep it for 25 years, pay the mortgage off in full. I can tell you, you're going to be blown away by the capital gains you're going to have on that property. Vancouver will continue. A lot of people ask me, what do you see for the future of Vancouver? The future is fantastic, just like it is for Southern California, Oregon, Seattle, New York City. Desirable cities like Vancouver are going to do fantastic in the long term. But in the short term, who knows? For me, who cares? Buy it, hold it, you need a roof over your head. So just the final point I'll make too. I did that blog last week on the wealthy renter, which of course there isn't such a thing. I had a couple people comment on my YouTube. I had a guy send me a nice email, you know, he just said, you know, Owen, I like your blogs, but you know, I am scared. I'm a little scared with the prices today, and I'm not too sure about mortgage rates going forward and that kind of thing, and I'm currently renting. Well, you know, I had to tell him that, listen, the only thing you should, if you're frozen on the sidelines, and especially I'm not sure in this guy's case if he was qualified yet for a mortgage, and of course the big hurdle for people who are renters getting into the market is getting that down payment. That's the big hurdle. Once you've cleared that hurdle, it's, you know, you're going to be far better off owning your principal residence in the long term. But, you know, I tell them I wouldn't be scared. The thing I would be scared about and would give me cold sweats is waking up in the middle of the night thinking about the $2,000 or $3,000 a month I'm paying for rent with nothing to show for it. If you do the math, folks, if you're going to be a long-term renter, renting for 20, 30 years or so in Vancouver, get a calculator out. If you're paying $2,000 a month for a one-bedroom, that's $24,000 a year. Multiply that by 20 or 25 years, also index it to rent increases. A typical bachelor renting a one-bedroom apartment is probably going to spend about $1 million on rental, on his rental property over the next 25 or 30 years. Whereas if he got the 10% down to buy a property, his mortgage cost would be a fraction of that. Plus he has a fully paid off condo in 25 years that might be worth $1 million too, that he could then sell and cash out tax-free. So in the book I've got coming out, which will be out, I'm hoping, towards the end of February, I've got several case studies in there that I break it all down with numbers and easy to read and follow. And I suggest people do the same thing. Do your homework on this kind of stuff. Go to sites like calculator.net and calculate the cost to own versus renting, and put in some different numbers. Right now you can lock in a rate at 2.4%, but stress test it to a higher number. I think our interest rates are going to stay low here for the foreseeable future. I'm going to say for the next 8 to 10 years. I mean, you could get a variable rate mortgage right now at 2.2%. In the next couple of years, if the interest rates start creeping up, you can lock it in for a 5-year term. So you're going to be good for at least 5 to 7 years. But let's say interest rates double 7 years from now and go up to 4.5 or even higher, 5%. Go to calculator.net and put in those numbers, and you'll break down your interest to principal payoff, and then compare it to paying your $25,000 or $30,000 annually to rent that unit. And you'll see it's absolutely a no-brainer. not to mention the tax benefits you get. So I've rambled here a bit, but my forecast for 2017 for Vancouver real estate over the long term is going to be fantastic, like I've been saying to my clients for the last 20 years. In the short term, all bets are off. You know, we might get a better buying opportunity down here, as I say, when inventory starts to finally go up. If and when interest rates start to go up, that will put a dampering on prices. One last thing though, keep in mind, as far as the interest rate hikes go, gee, if we got a couple of half or quarter point increases throughout 2017, so let's say we get 3 of them and the mortgage rate raises by 0.75%. In my opinion, that would probably, on a $500,000 Yaletown condo, knock about $25,000 off the price, because it's a teeter-totter effect. As interest rates go up, prices tend to moderate. But keep in mind that that 3/4 point interest rate hike over a 25-year amortization would probably build about $25,000 into your overall financing cost. So it's that old analogy, you can pay me now or pay more later on the financing costs. So again, the final thing is, a young guy, if you've got the money, if you're qualified for a mortgage, I would buy in today's market and lock in those low interest rates. You have to keep it for 8 to 10 years and you'll do fantastic. Much better off than what you would have done if you stayed on the sidelines and rented. Because after all, you need a roof over your head. You're either renting and paying rent, or you're owning, paying down the principal and paying some holding costs, but a fraction of what they were 8 years ago. I'm Owen Bigland. As always, thanks for watching. I'll see you in 2017.